Well, the Athens Stock Exchange is staging a comeback this year with its performance amongst the world's best this year. It is largely thanks to a fast-growing Greek economy as well as robust financial performance of listed companies over the past 2 years, which has fueled inbound investment into equities. I'm really pleased to say that the CEO of the Athens Stock Exchange, Yianos Kontopoulos, joins me on the show. It's wonderful to have you with us. Great to be having this conversation in person.
Thank you for having me.
Let's just start off with a discussion about specifically the Greek economy, and then we can expand it. 10 years ago, I was around the time of the crisis. It seemed almost unfathomable to believe that Greece could at some point be one of the bright spots of the Eurozone economy, and yet you fast forward to today and that is exactly the case. Greece has been a really good success story the last couple of years from a debt to GDP perspective, primary surplus, the whole story is there. Ratings upgrades have come through recently from the credit rating agencies. Just give us a sense of how positive the momentum is on the ground right now.
Right. So, look, the outperformance of the markets actually is not just 2023, which is a decent year for global markets. The ATHEX Stock Exchange was at the top in last year, which was pretty disastrous for markets too. So it was one of the few that had positive performance. And that, as you mentioned, it reflects fundamentals, right? Both on the macro side and on the micro side. The macro is, I think, the way that I would summarize it is that Greece, since 2022, is growing double the rate of the rest of Europe, and is projected to do so this year and next year, and without actually giving up much in terms of inflation. So the inflationary performance is slightly better than the average. So that combination is very, very significant here. And as you mentioned, declining debt to GDP, it's basically now an unleveraged economy. So it has characteristics, if you think of the global cycle, what are we afraid of? High inflation, the central bank reaction to that high inflation, and a slowing economy. So you have pent-up demand, higher growth than the rest. You are under-leveraged, so you don't suffer from higher rates, and you don't have inflation. So
let's go back to those credit rating agency upgrades. At the time, we all said it was a really big deal because Greece was being upgraded to investment grade. That would unlock a lot of capital into the country. Have you seen it? Has the money come in on back of these upgrades?
Well, look, it doesn't happen just magically from one day to another, but it starts a process. We have already started seeing that. Anecdotally, the reason I'm here in London is because we held a conference for Greek corporates here for international global investors, the second year that we organized it together with Morgan Stanley, and the degree of response, the type of investors that we had, the number of meetings, the quality of meetings, I think has left some very, very significant impressions.
What are some of the concerns that investors are citing right now? Because obviously the trajectory is good, but it's not completely out of the woods, as is, you could say the same for every European economy.
Sure. Look, one of the common, reactions is, if the rest of Europe, the core of Europe underperforms, what's going to happen to poor Greece? And the answer is, look, the rest of Europe has been underperforming for the last 3 years or so, I think since 19. Germany has been essentially flat since then, and Greece has, tremendous rates of growth. So I think it's something that we need to kind of rebalance a bit our thoughts in terms of what we were thinking in the past, because there's been a very significant number of reforms. I think the population and their confidence is picking up. And so there's space, there's landing space. There are concerns, as there are always, but I think you have actually surprisingly more cushion than other markets.